Good morning friends. Welcome to the YouTube channel Advocate Amit Kumar Gupta. In my series on the income tax cases, the case which I am going to discuss today is a very old judgment of Supreme Court. This judgment relates to the year 1962 and the case has been reported in 46 ITR at page number 649. Friends, the judgment came on 3rd May 1962. The logic of discussing this case is that we see in our routine professional practice of the income tax cases that in case the assessee gives advance to the various parties for the purpose of the business and due to some business integrities, if the assessee is not able to receive back those advance or the benefit in respect of those advances, then the assessee has to write off those advances into books of accounts. Now the moot question arises in these cases is that whether the assessee is entitled to write off these expenses as revenue expenditure or as a capital expenditure. When the department comes to this type of instances, I have seen that the department is very motivated by the amount of the expenditure. They do not go to the nature of the expenditure and they try to judge the nature of the expenditure by its quantum and not by the nature of the expenditure. In this particular case, the assessee was in the business of sugar manufacturing. It was the usual business practice that the assessee has to give the advances to the sugarcane growers so that the assessee can get their crop on time, the assessee can get good crop over its competitors. It was very usual business practice. In one year, it happened that there was some natural calamity due to which the crop was not good and the assessee could not get the sugarcane. Now the question came that whether the assessee will get the advance back or assessee has to write off this advance. There was a committee on this matter of the government who also recommended that the assessee has to forego some amount given as an advance in the interest of the farming. So the assessee write off some amount which was given as an advances to the sugarcane growers and claimed this loss as a revenue loss into the books of the accounts. When the assessment was going on, the assessing officer said that this is not a revenue loss, it is a capital loss. So accordingly made an disallowance of this return of advances into the books. The matter travelled to the MYSORE High Court. The High Court gave the decision into the favour of the assessee and said that this is a revenue loss and gave the relief to the assessee. But at that time also the appetite of the department was very high in respect of the litigation. So on this small matter also the department went to the Supreme Court and the Supreme Court held in this particular case that the expenses were given for the purchase which is being debited to the profit and loss account. When the assessee did not receive the goods and it was not able to receive the advances also, so there was a clear business loss for the assessee. There was no capital element in this. The facts are very clear, the facts are very apparent. So the Supreme Court also upheld the order of the MYSORE High Court in this respect and said that the advances which have been given for the purchase of the goods which are entered into the profit and loss account on the debit side of the assessee. So if any loss arising because of those transactions, then it is very clearly it is a business loss and it is not a capital loss. So the Supreme Court also upheld the order of the MYSORE High Court. Friends, we see in our practice that it is a very usual business practice that the assessee gives the advances for various expenses, because sometimes it happens that the assessee is not able to receive neither the benefit out of those services nor receive the amount back. So there is no doubt that this is a business loss because the assessee is not getting the benefit out of the amount incurred by the assessee. Friends, this case is very important in distinguishing the loss which is a business loss or a capital loss. At the end of this video, I am once again repeating the name of the case. The name of the case is Commissioner of Income Tax versus MYSORE Sugar Company Limited, and this case has been reported in 46 ITR at page number 649. Thank you, friends.